Hello, everyone, and thanks for joining us for the fourth quarter 2025 SDF investment update. I'm Matt Fettig.
And I'm Colleen Smiley.
I need to start by congratulating Colleen, who was just recently promoted to senior director. So I wanted to say thank you, Colleen, and congratulations.
Thanks, Matt.
So the fourth quarter was one of great interest. We witnessed some slowing in the economy based on the GDP results for the fourth quarter, weakening unemployment, and some stingy inflation. And the combination of those things had a lot of investors asking what was really going on under the hood. That said, markets largely shrugged off most of that news. Results were positive. The Fed cut interest rates again in the latter part of the fourth quarter and ultimately may be on hold now for greater economic data. The one thing I will say as I reflect back on the entire year is we saw our diversification really work well. It was the first time in a number of years where large cap, mega cap US stocks didn't lead the way. There was some great broadening in the markets, and we saw international stocks work very well. Emerging market stocks work even better. That diversification was very, very important and a big driver of results in the portfolio. And now I'll hand it over to Colleen.
Thanks, Matt. The endowment portfolio returned 2.6% in the fourth quarter, slightly ahead of its benchmark, and 13.5% for the full calendar year, in line with expectations. The primary driver of performance was public equities, especially international equities, which, as Matt noted, were among the strongest performing asset classes globally. Because the portfolio maintains meaningful exposure outside of the U.S., it was well positioned to benefit from the strong returns in developed and emerging markets. Other asset classes contributed modestly to performance. Bonds provided stability and income as rates began to decline, while other allocations were generally neutral for the year. Overall, the portfolio performed as designed in a year where global equities were the main source of returns. The long-term portfolio had a particularly strong year, returning 3.1% in the fourth quarter and 16.8% for the calendar year. This portfolio has a higher allocation to equities, which positioned it well in a year when stock markets, especially international markets, were very strong. The market environment changed from the first part of the year, as returns were no longer concentrated in just a handful of large companies. Importantly, fixed income and real assets also contributed positively for the calendar year. As interest rates stabilized and began to decline, bonds once again played their role as both a source of income and diversification. The combination of strong equity markets and supportive bond returns led to a very solid year overall. The medium-term portfolio returned 2% for the quarter and 11.3% for the year, modestly ahead of its benchmark in both periods. Although this portfolio has a more balanced allocation with a smaller equity exposure than the long-term pool, it still benefited from strong global stock returns, particularly internationally, as we've discussed. At the same time, its large allocation to fixed income proved meaningful. Bond markets delivered over 7% for the year, providing steady support and helping to smooth returns. The combination of equity participation and meaningful bond income is exactly how this portfolio is intended to function. The intermediate-term portfolio, which is invested entirely in fixed income, returned 1.2% for the quarter and 7.6% for the calendar year, outperforming its benchmark for the year. After a more challenging environment for bonds in prior years, 2025 marked a return to more stable conditions. Elevated interest rates earlier in the year provided attractive income, and as the Federal Reserve began cutting rates, bond prices were supported. Manager selection also added value, contributing to the portfolio's outperformance. The short-term portfolio returned 1% for the quarter and 4.2% for the year. This portfolio continued to benefit from the elevated interest rate environment throughout most of 2025. As the Federal Reserve begins to lower rates, we would expect returns here to gradually move back toward longer-term averages. That said, the portfolio remains well-positioned to provide liquidity, stability, and modest income. And finally, turning to the sustainable portfolios. The sustainable endowment and non-endowment portfolios returned 2.5% for the quarter and 15.4% for the year, performing in line with their benchmarks. As these portfolios are primarily invested in broad, passive equity strategies, they closely reflect overall market performance. As with our other equity-oriented portfolios, strong global stock returns, especially internationally, were the key driver of performance.
Thanks again for joining us today. As always, if you need more information, feel free to go to our website at sdfoundation.org. Thanks again.